Welcome to the Slingshot Options JIIVE Options Micro Swing Trading Strategy Review. I'm going to introduce to you this strategy, which is a home study course, video-based course you can access through a membership area that's going to teach you how to trade this method. So you develop a skill for life for making money. It's like teaching you how to fish, right? Okay, so let's move on. We're at the website here at slingshotoptions.com, and there's not a whole lot of information on here yet. We'll have to add some more. But the JIIVE Options Micro Swing Strategy has a particular type of setup that coordinates pretty well with the 16-minute bars. So, for example, we have a two months, 1 week span on Caterpillar. 2 months goes by like nothing, So within the 2 months, just taking a sampling here, random. We took all the trades on this sampling, so that showed up, and we stacked them all together, and we have 17.94 points as a result. And I know that may not seem like a lot. It's not flash and drama, but you got to think about it. And for those of you who are familiar with options and Caterpillar options, for example, with Caterpillar, if you on the side could pull off a net of 9.87 options points, okay, just thinking about taking at the money. Of course, you can go in the money and get, close to 17 points, right? If you go in the money, because you have higher deltas. Here you're looking at around a 50 delta. Plus you have premium decay factored in. So, but as soon as a position goes in the money, your deltas increase. So it's a dynamic combination of things. So I think this ratio here represents the options profits pretty well on average, putting everything together, including premium decay. So if you're able to make 9.87 option points, so all right, depends how much experience you have and how you're thinking. 9.8 options points on Caterpillar. 10 contracts you can see here. Okay, $9,000. Okay, nice. Okay, but Caterpillar options are relatively, they're not that high in price. So we can, as you advance as a trader, if you're starting off with a small amount, or not, if 50 contracts here may cost you what, 10. Let's say you go out. Well, let's just get a chain. Let's just go do that. You can go to cboe.com. Just sign up for an account. Get yourself a virtual. Oops, I got to log in. Okay. Anyways, you can go over here, CBOE, and you can put as much virtual money in as you want. Okay. So here, just type a symbol in here, for example. Find chain, pops up a chain. And you can look here. Let's see. Mid-January, 17th. Let's just see how many weeks we have here. I don't know if you can see this. One. Oh, sorry, we're on SPY still. It's Feb 17th. So we have to fold these here to get to these. So 95s, let's see, 27 days to expiration. Let's go a little shorter, see what we have here. Okay, we're almost at 95, and so these are at 215. If we went out a little further, these are at 254. So it's not that much more for 2 more weeks of time and a little slower decay rate. So, but we can take an average of, let's say 225. times 5. So 11 grand, okay, for 50 contracts. All right, so, and that's going to be relative to your trading account size as you learn how to do money management position sizes that we usually teach you some. I really should make a more comprehensive course on that. Let me write that down. Okay, so you take a fraction of your account, and anyways, that's outside of this review. Okay, so but the point is, you're going to take you'll figure out your own ideal money management position size. And so let's say you're trading 50 contracts. Well, that's a little bit more fun, right? And eventually you grow yourself to 100 contracts, and you can grow your trading account pretty quickly if you stay strict to a solid money management position sizing. Okay, and you're going to be able to adapt an ideal position size as you determine your own personal accuracy with this strategy. Now, this is very good. All right, and Caterpillar, I'm not saying that Caterpillar is a hot stock, right? But it can put in some good swings, and I kind of like this stock. Okay, so I put it up here, but I really should add some more stocks and for performance samples, so you can see maybe some drama, maybe another type of standard stock, maybe Apple, something like that. But anyways, you see here all these trades in a row, and look how small, for example, the losses are. So you can manage these losses well, or better on a micro level, because why? A 60-minute bar is usually a lot smaller than a day bar. That's basically why. And it's just relative to your entry and exit parameters. So here we're looking at this type of solidly workable, having a solidly workable method to, I can't guarantee you future returns, but when you have a solidly workable method, we put ourselves in position to succeed like this. And that's the best we can look for. That's a life principle. Nothing's guaranteed, okay? People may promise you guarantees, but their guarantee is not necessarily guaranteed, right? Even with governments, right? So we see here this type of money, and as you get up with more options points, let's say you're able to pick off 180 points on Google, which is likely. And so then all of a sudden those figures explode bigger. But then again, that requires a bigger options position. All right, so you get the point of this. That's 2 months and 1 week. This is another good strategy. I would get these strategies while you can. I shouldn't comment on pricing because you can change at any time. And any of these systems are pullable too. If we just made some, we have already retired several systems. It just depends. The more we right now we're creating a lot of stuff. But if we feel like retiring something because we're just gonna retire to one of our trading companies, then that's about it. So get these while you can. You don't know which one's going to fit your personality the best. All right, because if you find one that harmonizes with you, then you could do extremely well. Anyways, that's about it. Thanks.